Wire is brought to you by Resora. Elevate your real estate marketing with Resora. Effortlessly design, manage, and automate stunning email and social campaigns with our intuitive platform built for real estate. Say goodbye to complex marketing. Get started with your free account today at Resora.com. And by Notebook LM by Google. Unlock the power of your information with Notebook LM. Upload your documents and instantly access an expert AI that answers your questions, summarizes key points, and generates insights, all based on your specific sources. Become a knowledge master with Notebook LM. Try it now at notebooklm.google.
Happy holidays, everybody. I hope you're finding some time to relax and recharge before we all head into 2025.
Definitely.
But, even though we're all dreaming of sugar plums and time off, the real estate world just keeps chugging along.
Right, it never sleeps.
So let's do a quick recap of all the big real estate news that came out last week.
Yeah, get you ready for the new year.
So you can step into 2025 informed and maybe even a little ahead of the curve.
A little foresight never hurts.
Especially after the roller coaster ride. That was 2024.
Oh, man, tell me about it.
You know, it's funny, thinking back to the end of 2023, everybody was predicting that 2024 would be the year of the big housing rebound, falling interest rates, tons of buyers.
I got hype.
Remember all that. What happened to that?
I know, right? Well, 2024 definitely had some other plans, I guess, because
it did.
Sales barely inched past the 2023 numbers, which were,
dismal. What factors do you think played a role in 2024's,
less than stellar performance?
Yeah, less than stellar performances.
Well, Dr. Lisa Sturdivant over at RIS Media made a really good point.
Okay.
She said that trying to forecast in today's market is basically like trying to walk through a maze blindfolded.
Oh, wow.
The economy and the housing market are both in such uncharted territory that making any kind of predictions is...
it's really hard.
Really, really hard.
And on top of all that uncertainty, we still have this giant elephant in the room, which is the affordability crisis.
Oh, yeah, that's not going away.
And AT Tom released a report last week, and it highlights how widespread this problem is.
Oh, really?
They said that a median-priced home is less affordable than the historical average in 98% of the counties they looked at.
Wow, 98%.
It's almost all of them.
Jeez.
And it really shows you that for a lot of Americans, that dream of owning a home, it's getting harder and harder to achieve.
It really is, especially when you look at the numbers.
Yeah.
AT Tom said that the average worker needs to make almost $90,000 a year to afford a median-priced home.
$90,000. That's over 21% more than what the average person actually makes.
It's crazy.
It's like the harder you work, the further away that goal gets.
You're running on a treadmill going nowhere.
Exactly. And what's even more interesting is how this affordability problem is playing out across different parts of the country.
Yeah. Where are those affordable spots, if any?
What AT Tom's report had this really cool heat map.
Ooh, a heat map.
It showed where things were the most and least affordable.
Okay. Lay it on me. Where's the heat at?
Well, unsurprisingly, the West Coast and California in particular are still like the epicenter of unaffordability.
Yeah, California's rough.
Especially places like Los Angeles County, San Diego County, Orange County.
Oh, yeah, those are tough.
But get this, the most affordable large counties are mostly all bunched up in the Midwest.
The Midwest.
Yeah, like Cook County, Illinois, which has Chicago in it.
Okay.
Harris County, Texas, which has Houston. And then Wayne County, Michigan, where Detroit is.
Huh. So the Midwest is the place to be if you're looking for a deal.
Yeah.
That's a plot twist.
Right. And speaking of plot twists, let's talk about mortgage rates.
Don't get me started.
Remember the beginning of the year when all the forecasts said that rates would be around 6%?
Yeah, 6%. That was supposed to be the magic number.
The new normal.
Yeah, right.
Well, last week, mortgage rates decided to throw us all a curveball.
Oh, no, what happened?
They jumped back up above 7%.
Seriously?
Yeah, it was like a slap in the face to all those predictions.
Well, I guess, Housing Wire called it.
They did.
Yeah, they had an article, I think it was called, All Those 2025 Mortgage Rates Forecasts Are Now Wrong.
So they were the only ones who saw it coming.
Pretty much.
Pretty much, yeah.
I guess the Fed's December meeting kind of spooked the bond market.
Oh, really? How so?
They signaled fewer rate cuts in 2025 than people were expecting, and when the bond market freaks out, mortgage rates tend to follow suit.
So what does this all mean for people who are buying or selling right now? I mean, what are some possible scenarios we could see with these mortgage rates going forward?
Well, that's the million-dollar question, isn't it? Predicting interest rates is like
a guessing game.
It's like trying to predict the weather a month out.
Okay, so no crystal ball.
Yep.
But what are the things we should be keeping an eye on?
Well, inflation is always a big one.
Of course.
If prices keep going up, then rates will probably go up too.
Makes sense.
But the good news is that inflation seems to be cooling down a little bit.
Oh, that's good.
Slowly but surely.
Okay, at least it's moving in the right direction.
Exactly. But then there's the job market. You know, a strong job market is good for the economy overall, but it can actually push rates up too.
So it's kind of a double-edged sword.
Exactly. More people working means more people competing for homes,
right,
which can drive up prices.
And then we've got the wild card of politics.
Oh, yeah. Can't forget about that.
New policies, trade agreements, elections, all that stuff.
All of that can make the markets uncertain.
Right. And that uncertainty usually means
volatile rates.
So it sounds like 2025 is going to be another year of surprises.
Oh, you can bet on that.
Well, you know, that's real estate for you, always keeping us on our toes.
Always.
So we're going to take a quick break. And when we come back, we'll talk about how all of this is affecting buyers and investors.
Yeah, it's a wild ride out there for sure.
Hey there, thanks for tuning into The Wire. If you're enjoying the show and want to help us keep bringing you the latest in real estate, visit us at thewire.fm and click the Support the Wire button in the main navigation. Your support makes all the difference. Thank you. Now back to the show.
But you know, it's kind of amazing that even with all these challenges, some buyers are actually starting to adjust to these higher rates.
You think so? Are they finally giving up on waiting for those rates to drop back down to like
6%?
Where?
Like it's never going to happen.
Right.
Well, NAR said that existing home sales actually went up in November, even with rates still hanging out in that mid to upper 6% range.
Wow, that's pretty resilient.
Yeah, I think maybe people are finally realizing that they can't just put their lives on hold forever.
Yeah, you can't wait forever.
So they move on.
Right. And some experts like Lawrence Young from NAR and Sam Cater over at Freddie Mac, they're saying this might be a trend that we see more of in 2025.
Interesting. So maybe buyers are starting to accept that these higher rates are here to stay. But what about investors? They've been such a big part of the market the last few years.
Yeah.
Are they starting to feel the squeeze too?
Yeah, it seems like they are.
Really?
Yeah. CoreLogic has some data showing that investor purchases are almost at their lowest point since the pandemic started.
Wow. So even investors are backing off a bit.
Yeah, it seems like it. And, you know, investors are usually less sensitive to rate changes than regular home buyers.
Right.
But there are some other factors at play that are making the market less attractive to them right now.
Like what? What's making them hesitant?
Well, for one thing, those days of super fast price growth, they seem to be over.
Oh, so it's not as profitable to flip houses anymore.
Yeah, exactly. Economist Thomas Malone from CoreLogic, he pointed that out.
Makes sense.
Flippers and iBuyers, they really depend on making a quick profit. And that's just harder to do in a market where prices are going up more slowly.
So fewer opportunities to cash in quickly.
Right. And on top of that, it's getting tougher for investors to get loans.
Oh, really?
Yeah, lenders are being more strict.
So it's more expensive to borrow money.
Exactly. So you've got this combination of less appealing market conditions and tighter lending practices.
The perfect storm.
Yeah, and that's cooling down investor activity. But, you know, even with the overall slowdown, there are still some pockets of investor interest, especially in Texas.
Texas, always Texas.
CoreLogic's data shows that Dallas and Houston are still seeing a lot of investor action.
Oh, they do say everything's bigger in Texas.
Right.
All right, let's switch gears for a minute and talk about some of the big changes that are happening within the real estate industry itself.
Oh, yeah. There's some major stuff going on.
Things that could really shake things up.
Big time.
Okay, I'm all ears. What's happening?
Well, one story that's been making headlines is this whole battle between NAR and the Phoenix Realtors.
I heard about that. What's that all about?
It's about a program called MLS Choice, and it's basically challenging the way things have always been done in real estate.
It sounds like a rebellion.
It kind of is. So basically, MLS Choice lets agents access the MLS without having to be full members of NAR.
Okay.
Which goes against that traditional three-tier membership structure that they have.
Interesting.
And NAR is not happy about it at all. They even sent Phoenix Realtors a cease and desist letter.
Wow, a cease and desist. That's serious.
Yeah, they're saying that MLS Choice is hurting their brand standards.
So what's the thinking behind Phoenix Realtors doing this?
Well, they're saying that they're trying to adapt to the way the industry is changing.
Okay.
And that agents want more options and more flexibility.
I see.
So they see MLS Choice as a way to modernize things and give agents more power.
It's like the old guard versus the new wave.
Yeah, exactly. And then there's another development that's pretty interesting. It's this brand new MLS called Resides.
Resides. I saw something about that.
Yeah, it's pretty unique because it's a regional borderless solution that's totally separate from NAR.
Okay.
So agents in South Carolina and Georgia, they can join Resides without having to meet all those traditional membership requirements.
Huh. So it's like a whole different world for real estate agents.
Yeah, kind of a parallel universe.
So what do you think all of these changes mean for the future of real estate?
Well, it's hard to say for sure, but it definitely shows that the industry is changing.
Yeah. Things are in flux.
We've got agents wanting more control, technology is changing everything, and new players are coming in and shaking things up.
It's exciting.
Yeah, it's a really dynamic time to be in real estate, that's for sure.
I think the key takeaway here is that we all need to be adaptable.
Yeah, you gotta be able to roll with the punches.
Stay informed, be open to new ideas, and maybe even take a few risks.
Absolutely. The old ways of doing things might not work anymore.
All right, so as we wrap up our look at all the big real estate news from last week, I'm curious, what's the one thing that really stood out to you? What's the trend to watch in 2025?
Oh man, that's a tough one.
I know, right?
It's like picking a favorite kid.
Yeah.
But if I had to choose just one, I'd say it's that tension that we're seeing between the old ways of doing things in real estate and all these new forces that are pushing for change.
Yeah, like that whole MLS Choice thing.
Exactly. And then you've got these new models popping up like Resides.
Right.
And even the way that buyers and investors are behaving.
Like the industry's at this crossroads.
Yeah.
Is it going to stick with what's familiar, or is it going to embrace all this new stuff?
Right. Is it going to evolve or just stay stuck in the past?
And 2025 might be the year that decides all that.
Yeah, I think so.
So I guess the message here is that agents and broker owners need to be ready for anything.
Absolutely. Got to be adaptable.
Stay informed, be open to new ideas, and maybe even be a little bit rebellious.
Yeah. Shake things up a bit.
Well said. Well, on that note, let's all raise a glass to a happy and successful 2025.
Cheers to that.
Happy holidays, everyone, and we'll see you back here in the new year for another deep dive into the crazy world of real estate.
The Wire has been brought to you by Resora. Elevate your real estate marketing with Resora. Effortlessly design, manage, and automate stunning email and social campaigns with our intuitive platform built for real estate. Say goodbye to complex marketing. Get started with your free account today at resora.com. And by Notebook LM by Google. Unlock the power of your information with Notebook LM. Upload your documents and instantly access an expert AI that answers your questions, summarizes key points, and generates insights, all based on your specific sources. Become a knowledge master with Notebook LM. Try it now at notebooklm.google.